Welcome to the Lila Life Show. This is your host, Linda Andrews. I am the CEO and founder and integrative coach at Lila Life. And today's episode for you is about some criticisms and critiques about venture capital. So I just am warning you, if you're not into learning about venture capital or you get the big yawn in finance, this may not be the episode for you, but you may learn something. So stick around for the ride. And for those of you who don't know, I was 7 years in wealth management with one of the big financial firms, and I came to learn about venture capital from that journey. And so when I left finance officially and then went into entrepreneurship, I started to really study venture capital and just want to understand it. It felt very mystical and something that was very inaccessible to me. I want to start by sharing the definition of venture capital based on Investopedia.com, a form of private equity and a type of financing that investors provide to startup companies and small businesses that are believed to have long-term growth potential. Sounds pretty cool, right? And for those of you that don't know what is private equity, let's get that definition pumping here as well. We have private equity defined as an alternative investment class that buys and manages companies before selling them. And so often this is investments by accredited and institutional investors. Accredited investors are investors usually with a net worth over 5 million. And institutional investors, you can think of big banks and big companies. And that's some of those definitions. So venture capital, the statistic that keeps me up at night is less than 3% of venture capital funding goes to women. If that's not a mic drop moment, I don't know what is. And one of my latest tweets at Linda E. Andrews Twitter is what if only 3% of water went to women? And I know that venture capital is not water, but for new businesses, it can be, right? It can be that survival. And leaving Morgan Stanley in 2018 and navigating the world of entrepreneurship, navigating startups, understanding what venture capital is, and learning about this stat has just been an eye-opening journey. And I will be quite honest with you, that transition, which many of you may have faced from whatever your profession is into entrepreneurship, navigating, am I a startup, am I a small business? What's even the difference? Some of these terms are extremely ambiguous and the landscape is not clear and defined. And terms like moonshot and unicorn, it's like, what is going on? It truly does feel like an alternate universe. So I'm working on this little blog post called Why Can't Women Win in Venture Capital and Why It Means We Are All Losing. And I just offer this episode today as a very critical voice regarding the space. Specifically in wealth management, I saw what I believe would be considered affirmative action or affirmative hiring, where, there were actually quotas to have a certain number of diverse candidates defined as either women or underrepresented racial segments. And, I was a hiring manager for a little bit. So I would hear like, hey, you need to have 10 hires and 50% of those need to be quote unquote diverse. And as I was in that role, I started to realize, oh, I'm a diverse hire. Like, this is so weird. And I was 26 at the time. I had gotten promoted to a VP position. I was exited out of a training program at 2 years when it was 3 years to then get this promotion to be a VP and be a business development manager. So I was covering 220 financial advisors, in a pretty large segment of space. It was probably stretched about 60 miles and covering maybe 6 different offices. And during that time, it was obvious that I was a bit underqualified and that I was a diversity hire. And so I was getting sometimes pushback from other people that I worked with because of that. It was extremely just challenging and I felt very insecure. So that was a firsthand, experience as a woman in finance, a woman in business. And I know this happens all the time. Another thing I would witness is like women needing to be men in this workforce and feeling like survival mode to be able to hang with the guys and to be able to, like make it work. And it just always seemed like not the answer. It's like, okay, you need to like reject these innate parts of yourself to fit in with this, you know, 90% men ecosphere just because you're a woman in this business. So that was really all interesting to observe. I studied psych and journalism in my undergrad. And so it's fun to be doing a podcast and having just a journalistic curiosity, probably to everything in life. And I share that because entering into finance without a financial background, I was literally learning what stocks and bonds were on my Series 7. I like to say, if I can do it, you can do it. And there was this like deep desire and like ache within me that even if I didn't continue on that career path, that I could help women navigate their finances better. And that included me having to figure out my finances. And, anyone that wants to talk about finances, I love to share and offer some insights from a non-registered SEC compliant person, just as a human that had that career and shared some insights. And, that's a part of the coaching that I offer as part of Lila Life around prosperity. But getting back to the point here about venture capital, and just that firsthand experience of like being hired because I was a woman and am a woman, felt weird. And I remember asking my manager about it. And I said, this just doesn't feel right. Like, are they allowed to do this? Like it felt illegal. And her response was, yeah, like they're allowed to do this. This is in response to a lawsuit. And so they were having to meet these quotas in response to a lawsuit. I think this is very similar to Title IX. And I'm not here to say, is that the right or way to do it? I'm sure that there are pros and cons to approaching it that way. And one of the pros is to actually help create a workforce filled with women, right? Or to, in Title IX, have advocacy for women in athletics, because it's easy as maybe the non-revenue producing sport, say in college athletics, to be pushed aside, or in the workplace, it may not be the most natural environment in a workforce made for men on that 9 to 5 biological clock, that 24-hour biological clock. It's easy for women to be left out. And so this conversation poses a lot of really big questions around like, what's the role of women in society? Should women even be founding businesses? I mean, I sometimes listen to like a treasure trove of different podcast personalities, and some men literally will say like women should be at home. And it's just a really interesting environment. So when I was stepping down from that role, I was actually asked to stay on through year end so me and my manager could get our diversity bonuses, which is like, I have a vagina and he's getting a bonus because of my biology. And I thought that was so weird. And I was getting a bonus too, that I was a diverse candidate. So I think I got a check. I can't remember how much it was, but it was like my diversity bonus because I had stayed in that position for a year. And then he was getting like 2 to 4 times that amount because he had hired me. And I just was like, this is so bizarre. And part of the reason that I eventually left, like I just fundamentally thought this is just so interesting. And again, it's a really hard environment, I think hard workplace environment. There's a lot of cultural, a lot of diversity, a lot of issues in the workplace that have to do with these issues and don't. I want to help us just zoom out to a bigger picture that's like, hey, does funding through new ventures, through venture capital, 97% men, is that the best way to be doing this? And just share just some of the other insights. So according to the data provided by PitchBook, 2019 was the highest percentage of venture capital invested in women at 2.8%. And so we see this stat over and over and over again, where it's just hovering right there. I had a call this week with a mentor, and he thought the number was like at least 4 times that much, which that would be 12%. And so he was like shocked because he's thinking 12% and it's 3%. And like, I laugh. I think it might be a coping mechanism because I just feel so uncomfortable about this. Like, this is just truly a public service announcement. Like, hey, all the new businesses that are being generated, it's coming from 85% funded by men going to 97% men. Like, is that not the low-key mafia? I don't know. It seems insane. And so, like, why does this exist? Here's some of the common answers that I've heard. Women are meant to stay at home. Women don't want venture capital. And then this is actually a huge issue. 22-year-old analysts that are often white males are vetting the portfolio companies for venture capital partners, and they want to invest in hard tech, crypto, and AI. And so these other business ideas that aren't that are founded by women aren't getting those meetings. So we're going to insert a little bit of a different conversation here about the 60s. Did you know that in the 60s, it was common practice for banks to require a husband or another male to co-sign on a woman's bank account? So we're sitting here right now in 1970. No, we're sitting here in 2023. And so 63 years later, that, like, oh, wow, venture capital funding can go to women. Oh, wow, it's only 3%. But 63 years ago, like, women needed a man to sign on a bank account. In 1960, the Uniform Marriage and Divorce Act was created that allowed women to open bank accounts in their own names without having a co-signer. And the Equal Credit Opportunity Act of 1974 was allowing women to get credit without a male co-signer. You know, I think all this is so ironic when you hear about the pink tax, and that's like the extra 10% premium that women products often face. You hear about the sandwich generation, where women are usually leaving their jobs to be caretakers of their kids and their parents, and how there's missed earning potential during those years, often including not contributing to their retirement. I mean, this was stuff when I was at Morgan Stanley, like there was a whole segment called Women in Wealth, and we were hearing these stats over and over and over and over again. And so after like hearing and learning all that data and then seeing these venture capital numbers, I'm just like, what is going on? So like, this is something super personal to me. I sometimes talk about my own past trauma. I don't like to get into super detail because it's personal, but, you know, I want to just take a second here to talk about, you know, what we could define as sexual violence, sexual trauma. 1 in 3 women have experienced sexual violence, intimate partner violence, or stalking at some point in life. You know, there's some stats that is 1 out of 2 or 1 out of 5 women facing these extreme challenges that have long-term effects. So I want to just paint this picture for a second. All right. You have women that have an environment where 97% of funding go to men by 85% of men, right? So 15% of women are writing the checks, 85% are men writing the checks to 97% men and 3% women. These 3% of women, a large number of them have experienced some kind of sexual trauma in their life, myself included. And so there's a power dynamic that is extremely uncomfortable, where it's asking men for money in a very vulnerable position. And so I don't know if those dots are really being connected. Like, I've lived that. I've, you know, had prospective investors that have been male, that I'm like working through my past trauma, understanding, is this a safe environment? Are there ulterior motives? And it can be a confusing thing to navigate. And yeah, like, big conversation there that I think is worth having in a more meaningful way, maybe a transparent way, maybe making the process more transparent and having really clear milestones. So it doesn't feel so much like, oh, behind these closed doors or behind these curtains, these are how these decisions are made. and creating a safe environment for women. So if you're an ally, if you're a man, if you're someone in a decision-making position, including women, the importance of creating that safe space and helping build up that confidence. We all know in the business world, things can be extremely cutthroat. And I'm not asking for like a free pass for every single trauma survivor. I am asking for an awareness and a compassion that that's the reality of the situation. And that's what can be behind closed doors, different people navigating, including men, right? I don't want to bypass that men are also going through their own trauma experiences. So, and I'm saying that because some of these like feedback sessions, they can be brutal. And that's the reality of the dynamic, right? 85% of the decision makers are men, and those 15% that are women, they're often imposing what's called a negative bias. So males will be presented with different questions and comments that are lifting them up, where females will be facing, that negative bias that is all about like the risks and the reasons that it's going to fail. So men are positioned to look like, wow, it's epic, and women out the door are not. Taking a deep breath, and we're moving on from here. So according to a 2021 study by Allraise, I mentioned that 15%, it's actually 14.1% of decision makers being women in these venture capital firms. So the overwhelming majority being men. And it says up to only 19% of all investment professionals in the industry are women. And that's only increased 1% since 2016. It's like, what are we doing, people? And if we're just doing what we're doing and this is everybody's cool with it and I'm the only one with an issue, like, I'm willing to do some work around this. I just don't know if there's radical transparency about these numbers and that the conversation keeps going. It feels like every year, it's the end of year, the new numbers come out and it's like, oh, 3% of funding goes to women. And it's like, oh my gosh, 3% of funding goes to women. Like, I wonder what the number will be next year. Oh, it's 30%. And like, I'm not knocking any of the leaders in the space. Like, there's people doing such amazing work, specifically Allraise, I Fund Women, SoGal, an organization I've been a part of. I know there's so many people working to help move these dials. I'm just curious, the 97%, number one, of the males that are receiving the funding, are they being allies around this conversation? And then number two, the 86% of men funding these conversations, like, what are they doing in real time with transparency about writing more checks to women? I mean, if I could see a dashboard of that every day, people, like, one of my favorite things to look at. So that's interesting. I'd love to know if that tool exists. If it does, please send it to me. All right. So what else do we need to talk about here? Yeah, some really amazing, I mentioned some organizations, Sally Krawcheck with, oh my gosh, Sally Krawcheck with her her femme fine tech platform, financial tech for women, Elvest, Alexa Von Tobel. She was a real leader in the fintech space, actually got acquired with LearnVest. We have Sarah Blakely with Spanx. We have Serena Williams, Rihanna, Kylie, and Kim Kardashian, all billionaires. That's really cool. Not sure about the billionaire status of Serena, but she does have her own venture fund. A lot of leaders in the space. Sophia Amorosa, just listening to her podcast interview with Launch VC, and she this is so fun, her fund, Trust Fund, so people really, really making some waves in the space. We have the press, like the press coverage, and there's white collar crimes that are created that happen by women and men, right? White collar crimes. This is usually financially motivated, non-violent crimes that really impact people's financial well-being, things like fraud, embezzlement, insider trading, and money laundering. There's different things like this in the media right now, certainly regarding crypto. And what I also see is like, oh, there's the next white collar crime movie about a woman. And 23% of embezzlement cases in 2011 was women. And that's a relatively stable number. Women do create and commit white collar crimes, but very much less so than men. And so that's a really interesting piece about how the media entertainment is portraying women with these white collar crimes where it's predominantly men doing the white collar crimes. And I just feel like what a warning message, like, oh, hey, like, see, women, like, you better not start a business because you could be one of these women that have a white collar crime, movie made after you. Like, hey, we know you're barely getting any funding, but like, watch out. It's unbelievable to me. That's something that really, I'm like, what? Another movie about women, committing white collar crimes? Okay, well, let's work on those funding numbers. So I talked a little bit about negative bias, and again, this is the unconscious and conscious stereotypes and prejudices that people have against women that can equal the discrimination and unequal treatment. And in the startup world, some ways that this manifests: the lower funding, which I could talk all day about, as you know, the lack of networking opportunities, so not being able to create the network that is a problem for having that access to funding, stereotyping, they're less business competent, they're less committed, women being underestimated and undervalued. And this I just experienced with a family member where I'm sharing my pitch idea, it's a $1 billion business idea, and the family member is like, you do understand how big of an idea this is, like, is that okay for you? And it's just like, yeah, like that's like, live for this. Like, this 3% number is insane to me. So whether I'm on the funder side funding female founders, or I'm on the founder side receiving funding, like, I want to make a dent in this situation. And I feel like there could be a ton more female billionaires. You have a very specific output to be $1 billion company, and you have inputs that are based on your business plan. And then the rest is a time horizon and strategy and other variables like team that are helping that come to be. It's not rocket science. So I'm kind of like, why is this such an issue? Like, I don't know, like, is it the media? Is it like venture capitalists like talking like, oh, it's so inaccessible? Like, I can remember that when I started in finance, where all these guys, and it's all these new terms, and they're just talking, and like, I'm just feeling so much like an idiot. And because I don't know the lingo, it's like, is that jargon just pushing women out? It's like, let's communicate this in layman's terms, especially on the consumer behavior side, consumer spending. I think it's like 70% of consumer spending is made by women. So I think they can understand a thing or two about business, even though we've only had credit cards from the 70s. And then lastly, I mentioned stereotyping, but workplace culture, where women can feel excluded and undervalued. I am not at all wanting to neglect what men face, especially men identifying as coming from diverse and underrepresented backgrounds. But the intersectionality is an important conversation that I also want to make sure that women aren't getting lost in these conversations about intersectionality. So, we look at the world today, if we think about the utility of business, it's like, hey, we use business to solve problems and create solutions that are accessible and can grow. And the bigger the market and the bigger the problem, the bigger the business can get. Some people think we're in World War III. Other people think we're headed towards World War III. We have our soil that is, at least in the US, I think it's like 1% of soil has nutrient density. I mean, these are some huge problems that really could use some help. So is this myopic investment portfolio of 97% men the best way to do it? Okay. I'm talking a ton about venture capital. In 2018, only 2% of new businesses receive venture capital funding. So this may be a huge part of the problem. I believe it is. The pipeline, right? How many businesses are even venture capital fundable? In 2018, 2%. And so what happens when that number goes to 5% or 10% or 20%? An important conversation I had with my attorney a few years ago was, do you want to be a startup or a venture? Sorry, do you want to be a startup or are you a small business? And it like took me a year to figure out the difference. Some of these learning curves need to be way cut down. It's like, if you're a small business, it's this. If you're a startup, it's this. And helping guide some of those metrics, some of the understandings of that difference. So, and a part of why that's perpetuated is there's not women showing other women that this is possible. And there are also women that are showing other women that this is possible. So I want to, of course, honor and highlight those women. So only 2% of new businesses received venture capital funding in 2018. And out of those 2%, 97% of that funding went to women. So this is just such a minute segment of the population. As more and more people feel empowered through business, could venture capital be a very welcome, ample part of that? I believe so. So, what's the big deal about venture capital? It can provide a significant boost to startups with that capital and also expertise. So yes, it may not be for every business. Other businesses may use loans, grants, funding, but it can be a very valuable tool for companies that are scaling quickly and having those high levels of growth. So, consider your business needs. I mentioned the story about my time in finance and like getting promoted because I was a diversity hire. Like we're all getting bonuses because of that. Is that the answer here? Is the answer to just deploy capital blindly to women? I do not believe that at all. What I do believe is at that pre-seed, angel stage, even seed stage, that there be way better infrastructure to help women create their businesses in a way that is venture backable. And that process, like for me, I'm just now feeling like, I'm starting to get it. And that's almost 5 years. And so the amount of money, literally depleting all my savings, literally, having a venture, having another venture, now considering, is there a different venture? Like these are things that life cycle could be way more efficient. And I know there's different programs starting to come through that are helping that. And a lot of these venture funds are providing resources. I attended last week Founder University through Launch VC, their Founder University Intensive. It was a really powerful experience, very eye-opening. So I can't talk about this without talking about the wealth gap, all right? So in most companies and in most countries, including the US, the wealth gap between the top earners and the population, where 1% of households hold 15 times more wealth than the bottom 50% of households. This is in 2019 for the US. So what are these consequences of the wealth gap? And Google wealth gap, there's a 5-minute video on the wealth gap where it's like what people think the wealth gap is, and then it's like what it really is. And then so these top 1% of earners are making like just exponentially more than you would ever know than everyone else. And again, that is like a very fine line of a conversation. Many people think capitalism can never work to solve these problems. Others feel like the existing structure of capitalism isn't even capitalism in its like purity of what capitalism was meant to be. So we can have that conversation around at another time. But I want to highlight another impact of venture capital fund flows of perpetuating the wealth gap. So reduced economic mobility, it makes it hard for people in lower income brackets to move up the economic ladder. So now they can't educate themselves, start businesses, or accumulate savings. Social and political unrest. Hello, anybody seeing that? Feeling like the system is rigged? 97% of funding going to men, like, I don't know, seems like the system's rigged. And I'm surprised there's not more women creating social and political unrest. This is not a call for that. I think there could be solutions that don't equal that, but it's just obvious that this is not a healthy system. Speaking of health, the health disparities that then come from this wealth gap. And so people with lower incomes, less wealth, are having worse health outcomes, including higher rate of disease and shorter lifespans. Do not even get me started about healthcare. The only thing I want to say is let's make the soil healthier. Okay. And lastly, of course, the education access. So this is, again, an expanding problem. And how is funding males only, basically, like perpetuating the wealth gap? We can see that. So we could see that even clearer now because only 20% of the top 1% are women. Oh, wow. Surprising. And so in the US specifically, women accounted for 18.6% of the top 1% of household earners in 2019. So women were significantly underrepresented of the higher earners in the country. And if you want to feel even more disturbed by this as it relates to politics, out of the top 20 political donors, only 2 of those 20 were women, and they were featured right next to their husbands. And that was a Statistica, infograph. And we're like, oh, here we go, keeps going. So yeah, what's the deal? Historical gender disparities, right? We think back to the 60s and it's like, yeah, it's been a long road here. And again, the discrimination in the workplace, gender biases that affect hiring, promotion, and pay. So that's what's going on with the wealth gap. I believe this is financial oppression, and this is a huge issue. I think it's a huge issue that's not getting talked about. And I think it can be like kind of colored by maybe not the most effective approaches to feminism. I said something about toxic feminism to somebody and they were like, oh my God, I've never heard a woman say that term. And it's like, what? Like, to me, that's like the ineffective feminism where it's like victim mode and just non-effective and not like focusing on the real issues, and just a lot of noise, which may be super purposeful. Like that, talk about a psyop, that may just be like the perfect use of social medias to really captivate women and get them like frustrated and angry about like not like the most powerful actual statistics. I don't know, bear with me on that one. So is it realistic to propose annual goals for moving the dial forward about transparency around how the funds are invested while building the pipeline and possibilities for female founders? I think so. Like, I want to know every day how much dollars in the checks cut are cut to women. I want to know that. I want to know that. Like, somebody get that on my office, on my desk by tomorrow morning. I need that report by end of day today. I have a sense that where capital flows, energy goes. You may hear this in the coaching world, where focus goes, energy flows. Well, where capital flows, energy goes. Shifting this dynamic shifts the world. This is a little bit of a longer episode, so bear with me. I got a few other key points I really want to hit here because all these things are connected. The type of coaching that I do is called integrative coaching, and it's to acknowledge that everything is connected. I approach that conversation through integrative well-being, prosperity, and consciousness. So it's the financial empowerment, the mindset, and then your actual health and well-being. Everything is connected. And so I'm staying on this conversation and just needed to jump right into this post-workout mode because it's important and it's just stream of consciousness coming in here. So as of 2021, although we can't determine the exact percentage, but we know that the S&P, right, the stock market, the top 500 companies were at one point venture backed, right? So this venture capital is playing a significant role in the growth and successes of many innovative and high growth companies around the world that go on to make up the S&P. And this is affecting our overall economics, right? And so what's going on with gross domestic product? Our GDP can be provided by, venture capital investment can contribute to GDP by providing funding to startups and small businesses that then lead to job creation and economic growth. And so having new products or services, efficiency, innovation, this is all boosting economic activity, which is boosting GDP. Think about these words: new products or services, improve efficiency, drive innovation, all to boost economic activity. Did you know that the majority of healthcare research is focused on men, right? Do you understand that the majority of workplaces operate their workflow on a 24-hour hormonal cycle that is based on men versus the women's 28-day hormonal cycle. Like there is, again, a surplus of issues, especially affecting women, that has not just even been looked upon. And there are so many amazing founders doing work, giving solutions, but I'm hoping to inspire through these terms new products or services, improved efficiency, driving innovation that can help new creations come into the world, again, that boosts economic activity. It's a really weird story, but I just want to share it. So I was with my sister-in-law a few years ago, and she and I went to get gas. And I think about gas stations a lot. I know we have EV taking off, but we still have cars with gas. And people have to go to gas stations. And I don't love going to gas stations. They always feel a little like dirty. And, living in New Jersey for some time, they would pump your gas. So that was really cool. But it was still just like a kind of cringy vibe. And I don't know, like anybody out there that has had sketchy gas station experiences, I feel like that's an easy thing to have. And so I was getting gas and our dog was in the car and I was with my sister-in-law and there was a guy with his sunglasses on, and this was pre-pandemic, and he had a mask pulled up over his mouth and he was parked catty corner to us, like looking at us. And I was like, that's so weird. I have a weird feeling. And very quickly he went around, and now at this point he was facing away, but now he moved his car and now he's facing us and starts revving the engine. And I'm like, I don't know what the fuck is about to happen, but I freaked out and I backed out of the car, backed the car out so fast that I actually pulled off the gas pump, like from the gas thing, and gas like kind of started spraying for a second. And then there's like a shut off valve. And so I drove like probably at least a half a mile with the little gas spout thing flapping on the side of my car because I was so freaked out. And I called my husband and my brother and I'm like, oh my God, like this just happened. And I pulled up to the house and like I just had this gas nozzle in the car, and like we had to go back to the gas station and turn it in. And they were like wanting to charge us for taking it. And they're like, pull up the security cameras, like something sketchy was going on. And it was just a weird situation. So that's a gas station story that could inspire someone with a new product, service, or improving efficiency and driving innovation around gas stations. There are so many things that could apply to that same thought process where something kind of crazy happens. It's a problem many people have faced, and that drives innovation. So thinking about GDP, this can be difficult to quantify, but this is a connection of venture capital flowing into and impacting GDP over time. So just something to think about, because I don't know, could be nice to affect that in a positive way through female founders. In 2021, venture capital went down to 2.3%, according to PitchBook, for women. And that was for all female founders. The stats go a little bit higher for just one founder. So let's say I'm a founding team, 15% of venture capital dollars in the US went to startups with at least one female founder. And so for women out there, de-risking by having men on their team can help, make that a bit more of an attractive investment. God forbid it just be a woman or just all women on the founding team. So yeah, that's later stage investments usually get more into a private equity play, where out the gate, we're talking about these traditional venture capital investments. So what are the actual long-term effects of venture capital going predominantly to men? They are significant and far-reaching. We already talked about the gender wealth gap, but it is widening it. It limits the innovation and economic growth. It's from research shown that diverse teams and innovation produce better business outcomes. So if venture capital investments are going to primarily male-founded companies, this can limit the range of ideas and perspectives that are being funded, which limit innovation and overall economic growth. Oh, is anybody freaked out about the economy? Well, hey, if you want to understand what's part of the problem and perpetuating it, just look to your venture capital funders. It's reinforcing that bias and inclusion. And so if the investors are biased towards funding male founders. This is reinforcing the stereotypes that seem to have stagnated over the years. And then this decreased representation in leadership, where companies are founded and funded predominantly by men. This is leading to less diversity in leadership over time. So we're talking about corporate boards, we're talking about leadership teams, we're talking about the company overall, which then women are having trouble advancing their careers. And this is that underrepresentation of women in high level positions across many industries. And, there's a few things, like we talked a little bit earlier on about the sexual trauma, where it's like the men's club, the boys club, and some of these things that are said can just fly free when there aren't as many women. And when there is the minority women, they just kind of go along with it to fit in. They just feel lucky to be in these environments. Guys like have a chance to be an ally and to really call out, like, no, I do not tolerate this behavior. And we are making changes. And especially dads of daughters, like, think about this, how this applies in your business world. And there's so much I want to say about this. So yeah, I think I've hit this nail on the head. Funding going predominantly to men can have negative consequences for economic growth, gender equality, and diversity of leadership. Do I need to say it again? So let's just de-risk things for a second. For anyone that's feeling like fired up about this conversation, there is evidence to suggest, this is by Boston Consulting Group 2020, that companies with diverse leadership teams, including those with female founders, can perform better than those with homogeneous teams. So to all those venture capital investors that continue to invest in men, they're having trouble with their performance because female-founded companies generated 78 cents in revenue, while male-founded companies generated 31 cents for every dollar of funding. So, I hear this a ton in the venture capital space, like, oh, we got to get the winners in our portfolio. Like, how many of these are going to be a slam dunk? Oh, 9 out of 10 are failures, but 1 out of 10 is the home run. It's like, yeah, that's because you're funding homogeneous male-run companies that are returning 31 cents on the dollar. If you want to just do one little thing to change those stats and get, I don't know what, that's an over 2x on that dollar, is to invest in women. That's it. Like, just that alone. I mean, it's just really kind of crazy to me. So this is a study by First Round Capital that found companies with at least one female founder outperformed all male founding teams by 63% in terms of investment return. So it's a similar statistic. These stats can come and come and come, but it seems not enough to change what's going on. So my ask for everyone that has taken the time to listen to this, share it to someone that cares, that doesn't know this, start to have these conversations. If you have feedback and you want to talk, let me know. This is a very kind of stream of consciousness, unplanned, but I started writing this article yesterday. It'll be published soon, and I wanted to get the podcast out. What are the key takeaways? There's a business case for investing in women. There is a sensitivity and an awareness to what women have been through that can make this feel like an extremely unsafe environment to receive funds. I think with the cycles of tech and all that one can access through tech around just women, it's like making this weird. I was on a walk the other day and like someone was filming me and I'm like, this isn't OnlyFans. Like, I'm on a workout. Like, what the fuck are you doing? I just got cyber flashed from a new client. Like, this little, they're not a new client, but like, it was a prospective new client. These are things that in the modern world with the tech that women are facing, and maybe men are facing too, but it can make it feel unsafe. And so having some awareness as a decision maker around what women are up against and how unsafe things can feel from some of these other stats around the sexual trauma, to just have some awareness and create a safe and inclusive environment that is 100% business focused on business outcomes, but getting women up to speed where they need to be thinking in a way that can generate these business outcomes. We know what it takes to be $1 billion company. We know what a business plan and those inputs need to look like over what time horizon to get to be that billion-dollar company. And now let's support and help women to do that more and more. Thank you so much for your time. Have a beautiful day. Like, share, subscribe, all the things. And this is some real talk on the Lila Life Show. Signing off.